The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon Eastern Time. Let's go. You got the Dow up 43 at 18,110. You got the S&P up 7 at 2134. Composite Index is up 34 at 5189. VIX is down at 1704. It needs to get back into the 15s if this is going to be a sustained rally, or at least 1620s or lower. We've got, let's see, the E-mini, which is right now at 2126. This is up 4.75. Had a huge tumble from the 2185 round number high that it made back on the 23rd of August, plunged down to 2100, and had a big spike up and down. And now what we've got are a couple of things going on. We've got the big red bar, big green bar, big red. It's like a sandwich. Make it real simple. A close, a decisive close under 2100 confirms not only the sell mode in the daily extending, but I'm pretty sure that it will immediately take the weekly chart to a sell signal, upgraded to a sell mode. We'll see what happens by Friday. In the meantime, back to the range, the upside has limited upside. Resistance is in the 2135 to 2138 area. Let's go on. You've got gold right now, GC. Okay, gold is trading at 1327, up $3. It's just stuck. It's stuck with lower lows and lower highs, very gentle lower lows, lower highs in a weekly chart that says that this rectangle formation could continue a while longer. I'm suspecting that gold goes on for another couple of weeks, more to the downside. 1284, the 200-period exponential moving average is going to be key support that I'm looking at. It also comes in with a channel line, and that takes you to about 2 to 3 weeks' time. I'm thinking this is a consolidation in gold. Something's going on that says that gold is holding really well and that it is going to be way more important later on. So I'm watching it very closely. The dollar, meanwhile, also kind of stuck in a range. Dollar, limited upside. Now it's pulling back a little bit. It's down 24 cents at 95.39. Now this is going to be very interesting. The more work I did over the last couple of days, especially last night into early this morning, and I always love to do my homework, and I have background parameters. That's why people say, why don't you give a target for the Dow? You're always talking about higher highs, higher still to come. Why don't you give a target? And all I say is there's a measured move that takes you to the 19,000s. That's the measured move. I have, in the back of my mind, I have numbers that I'm keeping stored up. I don't want to be, in other words, I don't want to be looking at a particular number to confuse folks when in fact we're in a sell mode right now in the Dow weekly and basically a sell signal in the Dow and the S&P weekly charts. Now, let's just go on to the TLT. I'll explain what I'm looking at. There are a number of aspects within the last 5 days that are giving me a composite picture of both sentiment, technical sentiment, people sentiment, just listening to people as I'm speaking to people in everyday life, as well as what's going on politically. Maybe I'll have to talk politically later on. It doesn't matter. Maybe I will, maybe I won't. And there's just a lot of stuff that I'm storing up in the back of my mind. And then there's a moment where the light goes on, blink. All of a sudden, I said to myself, oh, that's what it means. It's the same as my indicators. Do you think I ever I woke up one day and said, let's see, there have to be 4 higher peaks. A peak D from the most obvious lowest low bar. No, it's years and years and thousands. It's actually not hundreds of thousands of charts. I'm pretty sure that I've diagrammed well over 250,000 charts over the years. I mean, diagram with ABCDs as well as trend lines and stuff. So in the back of my mind, I'm saying to myself, hey, the action over the last few days is telling me that individual stocks have had a pretty big downside move, and they've been pretty important. It tells me that bonds are still, in the monthly charts, still looking very good, but that we're starting to see cracks in the armor. It tells me that I've got to start thinking a lot more about the Japanization of our bond yields. There are a whole bunch of things going on. So I'll try to put that together as the clarity forms in articulating what's inside my head, because it's there, and sometimes things are just so clear, but I never have to actually articulate them because there's stuff that I just keep to myself. So this is not for keeping to myself. Bond yields have spiked. And if you look at the long-term chart, you've gone leg B, very sharp leg B, breaking some resistance levels in the weekly chart, but nothing that we haven't seen before. But it will be something we haven't seen before. If this really goes to a peak A, peak B, peak C, peak D, all the way, and then breaks that trend line, and instead of being the yield 30-year at 24.50, 24.34, we're actually up at 27.50 in the next 3 to 4 weeks. Then I have to say, you know what? Maybe we have seen the end of low yields. I just don't think it's going to be this easy. I really don't. I think it's going to be another test, not necessarily of the lows of 21.01, but another test of lower lows. In other words, lower lows from where we are, but maybe not taking out the 21.01 low that was made the week of the 15th of July. All right? Just wanted to articulate that. At least I can give you numbers. Now let's go on. So the TLT is attempting to find some support. Stochastics at 8%. If it flattens out, that's no good. But if it suddenly has a spike, in other words, I don't think the Fed is in a position right now to use monetary or financial, whatever means that they have of changing the scenario. I think it's still a matter of being gentle, and it could be a quarter point. And the fact that you could have already said the move in bonds going from the 2 point, what did I say? From the, let me give you the exact numbers. Going from 2.101 to 2.4, that's that's a 10% move. That's big. So do they have to really do anything right now? No, they'll just talk about probably December is where we're going to do something. That's what I'm thinking. Okay, now let's go on. So TLT, very important at 134. It takes out 130 in the next 3 weeks. Something else is going on. Closes under 130 in the weekly. But on the upside, if it goes back into the trading range, doesn't have to break to a new high, just has to go between 135 and 138 and hang out there for a little bit. That'll be a saving grace. Now let's go to something that's very important. Crude oil. Crude oil had a spike today, then it gave it up big. It's down 92 cents. It's at 44.01. There's that H pattern. And I remember yesterday I was guest hosting with Tommy O'Brien, and we spent a little time on this, and I was talking about the patterns in the Chapman wave methodology. We've got certain patterns that are viable trading. It's a trading methodology. It's from introducing the Chapman wave methodology. Let me just get that right now. Oh, we're about to go to break. During the break, I'll get it. It's come up here. Let me just type it in and password. Got it. Now we're all there. All right. Did it too quickly. Password's wrong. Got it. Okay. So this is what we're looking at, and we're going to go to the chapter called The Dreaded H. And Dreaded H is chapter 17, and it's right here. And the pattern that we're looking at is this pattern. The H pattern that breaks the left side low bar. Why are we looking at it? There's the pattern. We're going to watch that left side low at 43. That's in the TLT. I'll be back. Basil Chapman, Dow's up 25. Be right back after these important messages.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I was asked about MU. So in this particular situation, MU, of course, being Micron technology, it's very interesting because the SMHs, the semiconductor index, had a spectacular move to the upside, a stealth move. Very few people were talking about semis. Who would think that the semis, a commodity, no less, would spiral that high? Well, it certainly did. And MU, being one of the components, has made a peak D back at 36.59 in December of 2004. Comes back down a little bit sharply here, down to the 935 area. Has a single leg 8 to the upside. That was at 17.86, and that coincides with the weekly chart finally getting back above the 200-period moving average after smashing down the week of June the 26th of 2015. That's the cyan, that's the coral color, orange color moving average right there, this one here. And then it goes from that double bottom low. It starts off at $9.35, and it goes peak ABC. What do we always look for in the Chapman Wave methodology? We look for, I don't know why, it's just during the talking period, it just kind of fizzles. Well, we look for at least 4 higher peaks from the low bar. Let me just quickly do this so that you can see what I'm talking about. And there it is, 4 peaks. Here we go, slide it across, and there it is. So you go from an identifiable low bar, you go to peak A, B, C, D, and it gets you to D, and that's where other things can happen. It can pull back sharply. It can recycle in the Chapman Wave instant restart to an E/A, which can take you all the way. There are some charts that did that about 6 weeks ago or more, and then went on to E's. They often go to E and an F. That's how powerful this particular technique is. Well, in this particular instance, we got A, B, C, D. Technically, there was an instant restart potential, but then it stalled at a peak F, and the MACD and stochastic were tumbling at that particular point, with the price going from $17.86 on the 8th of September down to the low of a few days ago of $16.37. No big deal, considering from where it came from. But look how weak the technicals are. And the weekly chart did that dance, going way underneath that 200-period moving average. First time in over a year that is back there. And what does it do? It goes just above and then it pulls back. That's a very typical thing. So the question is, Carlos asked, should I short? Well, I'm going to tell you two things. One is, this is exactly where, if there was a little bit of a pop-up, which there was today, to the 1706 area, I'd like it a little bit more. I say perfect, because now look what you've got. You can short even here at 1690 for a 1.1787 would be my stop, even though it could actually make a double top, then come back down, but that would be my stop. So there's less than a point risk. But here's what I'm looking at. The weekly MACD and stochastic are very strong. This is what I was saying. I'm putting all this I'm churning it over, double boiling trouble, the witches are brewing, and the big pot they're stirring. Back in my mind, I've got this going, and it's kind of boiling over, and I'm saying, you know what? At first, there was nothing to tell us that the market would go down, because there really wasn't bad news until yields started to spiral to the upside. That's the bad news. And the VIX was screaming higher, except I think that the VIX got out of hand. I think the VIX is overbought. Therefore, we could go sideways with limited upside, but also for a couple of days, limited downside until the VIX recharges for its next move to the upside, next move to the downside in the market. But what this is telling me is that we actually do have, once again, a rotational correction. It's even a rotational recession in some areas. Here's what I'm going to say to you. That MU, I don't think, I would have thought it right at the next day, making a peak F top, because we actually shorted the semiconductors, made a little bit of a profit, and we still basically short the semis. But at the same time, that's the overall index. But here's a stock that I think is holding real well. So, Carlos, I'm going to say to you, as a pick, I don't think I would go for Micron, unless, of course, you're talking real short term. If you're talking about going from 1691 to test the 1637 low, maybe going to 1590, then I'd say, yeah, okay, this is the period to do it. But I'm also going to say to you, have a little patience, because I'm trying to finesse it in terms of your shorting, because I don't, at this point, there's nothing yet to tell me that Micron, MU, trading at 1692, up 18 cents. There's nothing to tell me that it can't do anything more than a 1-to-1. So let's just do that. 1786 from 1637. Let's call that 50 cents. So you got yourself $1.50. So let's go $1.50. I'm going to have to take it from the top here, maximum. 1706. Yeah, you're talking about 1570s, right? That's what I'm seeing right now. I could be totally wrong in this, and let me just show you. Look at Intel, INTC. What's happening in Intel, there was a peak D. I should put the down arrow because everything turned down sharply, the MACD and stochastic. But that weekly chart as well is holding very nicely with that MACD still strong, stochastic still at 88%. I think this is telling us that we've got to listen to reports. And the report that I'm listening to says that earnings are the highest they've been in 6 years. And they're higher than they were 6 years ago for the first time, or 7 years ago, whatever it is. And I think that people are feeling a little bit more flush with money. And I suspect that that money is going to be used and it's going to go back into the stock market at some point. So let me just quickly sum it up. Let's go back to MU, which is Micron. I'm going to suggest that if you are going to short it, I've heard that you've said that you've used puts before. Why don't you buy, I'm not sure if I can do this right now. Let me see if I can do this. Give me a second. Options station, let's go there. Okay. I'm going to say, why don't we look out 2 weeks, 2 to 3 weeks, maybe September. Look at the October contract. And let's see if we can find, yeah, we got MU, Micron Technology. So we're going to go to September, the week of the 7th. Now I'm going to go to the week of the 14th. So the week of the 14th, and I'm going to see if they've got what they're trading. They good. They do trade in increments. So let's see. Wait a minute. Why am I looking at this? This is Micron Technology trading at 16. Why am I not getting any price here? Strike. Oh, there it is. Okay. Sorry. It just suddenly looked a little fuzzy. 16.50, trading at 73, bid 77, offered. Here's what I'm going to say to you. Have a little patience. See if you can get the 1650 October, the week of whatever I said, the second week of October. I'm always a little frustrated. This doesn't give me as much instant information. It gives me a lot of technical information, but the stuff I really want, I always find a little difficulty with it. Yeah, trading at 78. If you can get the October 1650 strike, let me double check, for less than 50 cents, 49 to 47 cents, that's the deal. That's what I'd be looking at. Why? And I wouldn't get carried away. I just get a few and that's it. I just don't think that it's going to break down that far. And the way to do it is with an option. To do it with a stock, I just think it's using capital inefficiently. Hope that helps you, Carlos. And yeah, market's coming back. Oh, I didn't show this as I'm going out. I'm going to show you. Here's the S&P. Made a peak in the 5 minutes, pulling back. I'll talk a little more when I get back about the E-minis. I just forgot to do it. I did it for the den, but I forgot to do it for the listeners.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Now, folks, so let me just quickly catch up here. First of all, this is the chart I meant to show you before. Remember yesterday I spent some time talking about that single leg A up that could fail? So so the E-mini, 10-minute chart, look what happened. it came down to 2117.50, had a spiral to the upside with the oil and all that stuff. And then the next thing, it comes back down. Remember the pattern we were talking about yesterday? I showed it in crude oil, I showed it in a number of different things. The Eiffel Tower, they go straight up, straight down. And if it breaks 2/3 of the pattern, you could go even lower and test the bottom. Well, it just stopped in time, and now it's trying very desperately to hold. I'm not sure it's going to hold because the basic trend that we've had. You remember yesterday, I think it was during the show, or it was in the den or something, I mentioned that I had a very high reading for the Chapman wave in the short-term trend. Let me just see if I can get there. I'll have to move things out of the way. Yeah, this is the one right here. Oh, got a lot of charts, huh? Yeah, this is the one. The short-term trading index hit 5.98. 5.98 says that the market was down $500 or $600. Okay, but it wasn't. So that says to me that between the 20.51 in the VIX and the massive move in the trend, we are in a very oversold condition, but it means that the trend, the weekly trend, which is down, and the daily trend says that rallies will fail. And I also had a technical indicator, which I think I discussed it, which said that within 2 days, the E-mini should move up 9 to 11 points, and it could come from lower down. It could come anywhere. It's often overnight, but you just got to be careful if you were shorting, because you wanted for this to fulfill its upside. Well, we've already got that. Now we've had that big spike to the upside. Here it is. This is now the S&P cash. Gave me a beautiful, look at that, bold formation to a peak E with the left side, right side price time match. Went above the 200-period moving average. Pop, it gets hit and it comes back down. We just saw the same technique of the 200 moving average in MU, which is Micron, pulling back from that coral 200 period. This is 5-minute 200 period moving average. The other one was the daily or weekly. So isn't this interesting? So now you've got this H pattern. What is the H pattern? Remember I said what it is? You come down sharply, you make a rally within a few bars. Usually it's no more than 3 bars, 2 to 3 bars. You start to curve to the right side, you roll over, then you take out that left side low. In this case, if you take out that 21, 29.75, whatever it is right there, that low in the E-mini, in the S&P cash, you'll go even lower. So this is the pattern that you can learn. It's the Chapman wave. H pattern, lowercase h pattern. I call it the dreaded H pattern. All right, enough with that. Now we've got a whole bunch of things to do. So that was for Carlos so that was MU. If you want to short, you can short it right here, and I would have less than a point stop, 1 penny over the last high, the peak F high, and then I would move down my stop a little bit because these things can move very quickly. You want to see a very, very quick failure. So Ernie asked SPRT, which is Sarepta SRPT, I bet. SRPT, yep. Sarepta Farm, put it in the right place. SRPT. And now what are we looking at? A very big spike to the upside. I saw that last night going by on the ticker, moving higher. So they must have had earnings or a good report. You know, Sarepta Therapeutics Inc., Biopharma, they have cancer treatments that they've been working on for ages. It's only a matter of time before they get it right. I was talking to someone just the other day, one of the big, if anybody remembers Millennium Pharmaceuticals way back, he was one of the founders. Young guy, nice McLaren he was driving. So we were talking about the biotechs and what's going on here. And also speaking to Joe, who's one of my go-to guy for biotech in terms of learning what's happening, who's doing what, etc. And everything I'm looking at says that biotech move from the 400 area, smashing to the downside in the IBB and then rallying back up a little bit and then making the H pattern. All of it says it's individual stocks that could hold up the IBB a little while longer. But in fact, I think that they are running out of energy. And to put it into perspective, I'm going to call this F/E just for the moment in the daily. So now, all I can say is I suspect that Ern, you're already in Sarepta Pharmaceuticals. If you're not, I really couldn't, in all good honesty, say to you, take even a nibble right here, because this is a stock that moves on news. We know that. We know that from way back when it was a different name, and Bud Rolfs introduced us to this stock, and it's been hair-raising. I mean, it went from double digits down to to pennies, I think, at one point, and then it changed its name. I don't know what it did. So this is really a volatile stock. I would not be recommending anybody buy it. Yeah, you could buy it and you could make a lot of money. I'm just saying to you, I just see the risk. This is a news-related event. The stochastic and MACD are very good. Somebody give me a call when it comes back to 28, between 28 and 25, and then we'll have a look at it again. See in the monthly chart if they can have another move to the upside. Meantime, this is very strong and it looks very good. Here again, I would just say, you know what? It's a 32.22. Wait for a pullback and buy the 30 call. Buy the October 30 call. That's a nice way to play. Let it just tell you, on a pure speculation with very little money, that's the way I would play it. But it is biotech. Be real careful. That's all I'm saying. So all I'm saying is, yes, it looks good. If this is C, then it's going to go modestly higher. Just make it real simple. If Sarepta Pharmaceuticals up 6.59, up 25.73% on the day. If SRPT, I'm just saying, I don't know what the news is, but if it's a takeover, then forget about it. But if it's just news related to the business of the biotech, pharma, then you need to wait for a pullback. And then I would say, okay, let's look at it together. Give me another email or call my show and we'll look at it again. But I have to say to you, I have no choice. It doesn't have to fill the gap under 29.60. I prefer if it fills at least a little bit of that gap and we can look at it again. So that's all I'm saying. And it certainly can go higher. But I'd like a pullback before we get into it. Before I recommend. Chris asked about the TVIX earlier on when the market was up quite nicely. And I said, if the volatility index, this is 2 times along the VIX, if the volatility index, if the market rallies back again, if the Dow goes back to about a plus 50, plus 60, it's a plus 27 right now. If the S&P goes to plus 8, it's a plus 5 right now. That volatility index, and if it holds all the way through to 3:30 p.m., the volatility index is going to pull back sharply. What I said is, yes, you could nibble on it. It was in the mid-25s. It's now 25.11. But that's only a nibble. I would prefer to look at it again between 24.20 and 23.50. That's about where I'd say, okay, let's look at it. Maybe we need a little time, maybe 2 days, maybe by Thursday afternoon, maybe Friday. But right now, this is a single leg up. I've got to be respecting it as a news and emotional spike to the upside. And now it just is single leg. It goes from what? For $11 and, I'm sorry, this is the TVIX, goes from $18.36 to $28.49. I would have to say that under any condition up 10 points is a huge move to the upside. It needs a little time. I wouldn't be surprised if the market just moves to the upside here and just holds very nicely. Then we want to look at HO heating oil. We'll look at the Dow. Is that a bottom coming next week for a trade? And the XHB. I'll be right back. Basil Chapman, Target Emissions Hour. Dow's up 35. Where's the chart I wanted to show you on the S&P? Right there. Oops, wrong.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, so I was asked about heating oil. Heating oil is the heating oil continuous contract. Look at this. You come down, and what's the pattern that you make? You remember the dreaded H pattern? But there's also something else. It's something that I call the right shoulder failure pattern. And this is one of the one. This is the one that I've often spoken about over all the years that I've been here. Whenever I talk about Whenever I talk about the 1987 top, when I had my first client, Fidelity Mutual Funds, in the technical department, and I just moved from paper hand charting engineering paper to the computer to 78. I hadn't gone to computers yet, but I had. No, I was still doing that's right. I was still hand charting, and then what happened was there was a move up, which because I hand charted, whenever there was a move of less than one little tiny square, and each square was a point, I would circle it with a little yellow, felt pen, a little yellow dot there. And eventually I learned, you remember earlier I was saying that I don't look for these techniques, they just pop out at me at a certain point. And, am I missing my IMs? Oh, I'm not missing. Oh, I'm going to have to talk about that later. I want to go straight to Marvin in Orlando. Hi, Marvin, how are you?
Hi, Basil. Thank you for taking my call.
My pleasure.
I saw a chart I wanted to get your opinion on. It was a S&P monthly chart.
Yes, sure. So should we go to the SPY or the S&P, or does it matter?
Oh, it doesn't matter.
Okay, so I'm going to go because most people can just type in SPY. It's easier for them. Let's go to the SPY. Question away or state away?
So they drew 2 lines, and they called it a wedge. So they drew one line from the 2009 lows all the way hugging the low that we had back in February.
Okay.
That was on the bottom. And on the top...
So now, let me just do that. I'm going to expand this, and I'm going to draw exactly what you're talking about. I always do this. I didn't do it in this particular instance, but there it is. This is it. And it goes to maybe a tad below the low of this month so far, but a little bit above the 9-period exponential moving average in the monthly chart. And on the upside, I'm going to join all these guys here. Let me do that. Okay, fire away. Yes.
And then
so
on
now,
the top line was from the high of 2000, and they drew a line all the way to the top that we're at right now.
Oh, wait a minute. Oh, okay. I did the shorter term, the very short term. I did a rising trend line, but term, I've already drawn in from the low of 2009. That 2009, that was March. That was the Monday, March the 9th, because the Dow made its bottom on the 6th. So let's do that right there. And they've joined the highs of 2000. Squash, 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 squash. There we go. So 2000, yeah, okay. All right. I can see exactly what you're doing. My preference would have been, I've done this before in my charts, my long-term charts, where I've joined the high of October the 2007. But let's go to the very long one. That's the one from 155.75. Folks, we're looking at the SPY. Ooh, it's going to get a little messy, but that's okay because I'm going to squeeze it again. Squeeze, 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 squeeze. Okay, now what's the conclusion?
So the thing is a rising wedge formation that could eventually lead to a big correction.
Okay, so there are two things. First of all, let me just quickly say, I've done a lot of work with rising wedge formations because they usually coincide with the Chapman wave going to a DE or F. And I've done a lot of work with declining wedge formations. Now, I have a pattern that I call the falling axis, the exact opposite. This is a narrowing and not expanding. And my conclusion is that at the end of a trend, if you have a rising wedge formation, I have no idea. I'm very visual. So the pattern that I've always had in my mind, and it's actually not even correct, but I've always had in my mind, is a Statue of Liberty, holding the torch, right? But if you had to put your hand out and make a cup formation, I wonder if I can do that. A cup formation, that's essentially what happens after a rising wedge. It pulls back. The rule of thumb, which you've just stated, is that many technicians say, oh, it can go all the way back to the lows that were made starting the wedge formation. I say, First you make a cup formation, and if you break that wedge in the next move up, and in this case, we've got a peak B, probably if there's no new high in September, all we have to do is go 1 penny above 219.60, and if it's not this month, if it's next month, if it's this month, it extends leg B. If it's next month, it starts leg C. And all you have to do is begin that phase, and I would tell you that the rising wedge formation is done, it's finished, it's a different formation altogether. So yeah, this is what I would say to you. If the rising wedge pulls back from here, especially with the doji candle of last week, and a doji candle in a monthly chart, especially a small one like this, is very unusual. You can go back years and you hardly find any at tops, right? So what I'm looking at is that 210.28 is the 9-period moving average in the SPY monthly chart. If there is a close below 209, then the next level I'd be looking at is the low of June of 198.65. Even then, I think it would just touch the trend line above that and make a reversal to the upside. So let me just, in my thinking, two aspects here are very important. One is it's a little too short for a rising wedge formation of power. That's my thinking right now. When they extend out with a lot of time, and you get narrower and narrower bars until you get to the apex, and then it pulls back, then you could pull back 1/3 of the distance. If you take out the 1/3 of the distance, you could actually go deeper, but it's not that usual. So I'm just going to say to you, yes, I do. I'm aware of it. I always talk about it. Whenever in my work, I talk about the wedge formation, and my rule of thumb is that more often than not, all that you do is you make a cup formation. That means there's a lower bar maybe next month of October, and then there's a turn to the upside, and by November, you're starting to go towards the previous high. So in what you've been, the framework that you've been referring to says that if this is a rising wedge, we could have a very serious decline. That decline, technically by the inference, should take out the low of 198.65, the low of June. And I'm saying at this particular point, I'm not sure we're going to take that out. I think we're going to take time more than price. 210 is really the level I'm looking at and that's where I think we're going to find some support. Am I? Is this kind of what you? Is that as part of a question that you have?
Yes. I just want to get your opinion on that, basically, right?
Yeah, so my opinion is that in the Chapman wave, we've gone to a leg B, and it's probably going to be this month a peak B. There is a trend line. The longer the trend line, the more it is informative than actionable. Because the longer it is, the less it's rare for it to actually become so important. I think it's going to be taken out. That's number one. Secondly, the trend line that I would be looking at is one that actually goes towards 200 and to the 218. Sorry, can you hold on? I want to give you accurate numbers. Will you hold on?
Sure, no problem.
Sure. So we've got Marvin in Orlando. We're talking about the SPY and the monthly, and I'll be right back. I'll do some numbers. When we get back, I'll talk about them.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi folks, we're back. We're back with Marvin in Orlando. Dow's up 42, S&P's up 6.69. Just real quickly, I'll just show you this. A nice attempt at a comeback here, but it's the S&P cash that we're looking at. Look at that sideways move. There's the H so far. It's successful. It's going from a lowercase h to a lowercase m. That's part of the technique involved. So I'll give you parameters for the rest of the day. Under 21.27 in the E-mini, not good. Over 21.36, it can retest the high of the day. Just make it as simple as that. Now, so Marvin, this is what I'm looking at. 222, I believe. Yeah. This trend line goes, it depends which month, 222 to 224 for the SPY. And that's the way I would look at it. But if that starts leg C, I'd still be looking for a D. So at this particular point, I'm saying to you that the 211 to 210 area is going to be critical over the next week and a half, 2 weeks. That has to hold. If it starts to go, then I'm looking at something a little deeper. But really, I think this is time more than price. If it goes to the 209 area, I could even make a case that the weekly chart has a trend line right there. Yep, there's that 210 again. So if it closes under 210, then I'm going to have to say, okay, Marvin, whoever, that analysis you were talking about, maybe we can go a little deeper, but I don't think it gives a huge chunk back of the gains from 181 to 219. I think it gives back, maybe a third of worst case situation. That's what I'm looking at. I think we've begun the rotation. So I'm going to be talking about this theme quite a bit. So call me if there's anything else that you want to discuss about this. But those are the parameters I'm looking at right now. 212s will be the first real test, and the upside, a break of the 216.80 level. Let's call it 217s. Then I have to say, you know what? We don't even be going down that far because we're already showing rotational strength. I hope that helps you, Marvin.
Thank you. Can I ask one quick question? So in November, if you don't make a new high in November, then what does that mean?
Nothing.
Or nothing?
It doesn't mean anything. What does mean something is if we've broken and gone to the 205 level or 204 level, I'm going to have to rethink a lot of things. But I'd say that's key for me on the SPY. That's 10 points down. That's another more than 1,000 points in the Dow. So, I'm just trying to keep it simple right now. And that's what I'm looking at. So I hope that helps you.
Thank you.
Thank you very much for calling. So real quickly, dust, someone wanted to know about dust. Is long dust, which is the 3 times short gold. I'd be a little careful only in that, I don't know where you got in, but please make the 34.36 low today. It's at 36.32 DUST. I'd make that my stop. Because if it takes that out, you can go very quickly to the downside. If gold suddenly spirals up, I think you're in the right position now, but I just wanted to give you the warning rather than to say, great, now I could go to 39.50. Yeah, it could, but I want you to have that stop in place. In fact, I'd even make it a little bit stronger. I'd make it 35.20 if it goes down there a point today. Just be a little careful. Okay, that was that. XHB. XHB is the... what is this? The Spider, Home Builders. Gosh, I had this notated. So it's gone to a peak D in the weekly. I'm just saying, be careful. A question in the den about Toll Brothers. Would you buy it or wait? I'm saying wait. Just wait because this interest rate factor could be a little bit of a hang up for the X dollar HGX, which is the Philadelphia housing sector. Look, the peak D in the weekly, peak B. I'm calling it B. It could be E/B in the monthly, but most importantly, the daily says that 236, the HGX index could test 234, the 200 period moving average. That's going to be important. Meantime, I see this market just rotating to consolidate, and each step down says new rotation, and that's why the IBB is acting so well. When I really do an analysis of IBB, I've got to say that the buying keeps coming in, but it's not really breaking out into the 292 area. So, folks, Basil Chapman, Tiger Technicians Hour. I'll be back tomorrow. Hey, you have any questions, just email. I got you about 12 questions today from emails and den people and callers. So I will be back tomorrow. Have a great day. Stay tuned for the rest of the program. Fabulous program all the way through. And don't forget Steve Rhodes' webinar tonight. Very important about turning points. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.